So I'm going to break down this report for you, and this is the gap fill report. And I'll start by explaining what a gap fill is. So a gap fill is, let's say on Monday, price closes at $100. On Tuesday, it opens at $95. That's a $5 gap down, 100 minus 95. So that's a $5 gap down. A gap fill would be if on Tuesday, price reached that $100 close. A gap up is if Monday closes at 100, Tuesday opens at 105, so it went up overnight. A gap fill would be if it came back down to that $100 mark on Tuesday. So pretty much a gap fill is just when the following day's price touches the previous day's closing price, regardless of where it is. So now we're looking at the standard gap fill report. We're looking at gaps up, we're looking at gaps down, and then this shows how often the gaps get filled. So we're looking at SPY in the last year, and the gaps up get filled 68% of the time, which means that if it has gone up to 105, 68% of the time, it has come back down to 100. 62% of the time, the gaps down have filled, which means if it closed yesterday at 100 and today opened at 95, 62% of the time, price touches that $100 mark. So now, this is the gap fill by gap size report. So now this is the same thing as before, but this is filtering down by how big that gap is. So this only includes, this filter we're looking at here is gaps less than $1. So you can expect that gaps that are less than $1 for SPY often fill because it's probably very close, opening very close to that. So let's say hypothetically, the closing price is 100. Let's say it opens at 99.50. So it's very likely that 50 cents will fill and then the gap will fill. So now let's look at between $1 and $3. So this is a gap between $1 and $3. This is kind of more where SPY's gaps lie. So you can see that 65% of gaps up between $1 and $3 get filled. And there's really not too much significant data on the gaps down. It means there isn't really too much leaning one way or the other. It's 54-46. But as the gaps get bigger, now it's less likely that they get filled. So what we can see here is gaps down between $3 and $5, 71% of them do not get filled. So that means that if Monday closes at 100, Tuesday opens at 95, and this is saying that's a $5 gap, that it'll just continue to go down. It'll never reach that $100 mark again. So that's what this is saying. This, again, the gap up doesn't really have too much data. It's kind of split 50-50. And then as you go up, you can obviously see that the fills become less likely. So there's only been 2 gaps up greater than $10, and both of them did not fill, and that's to be expected. But now let's look at it by weekday. Now this is important because certain days have certain behaviors, they have different tendencies. So what you see here is that we've selected Monday now. And what you notice is that the gaps down on Mondays have filled 73% of the time. That's very significant. That's very important to know because it gives you a sentiment to be bullish or bearish for that day. So 73% of the time, gaps down get filled. So again, if price closes at 100 and then it opens at 95, now 73% of the time, that gap gets filled. The gap up has somewhat significant data of 61%, but as we go through the weekdays, everything changes. So you can see on Thursdays, gaps down don't generally fill, and on Fridays, the gaps normally fill. The last piece that we have here is gap by weekday and by size. So now this is a much more refined report. So this says if today is Monday and there's a gap down between $1 and $3, what is the likelihood of the gaps filling? What has happened historically? So you can see here, it's not too much data here. Maybe the gap up has good data. Maybe the gap's not filling on gap down, which means it'll just continue down. But as we look through this, so you can see on Tuesdays, gaps down between $1 and $3 have not been filled almost Well, actually 2/3 of the time. We could just look through the other days where you can see that Fridays, gaps between $1 and $3 get filled. And as you look at different gap sizes, the data changes. So this is very important for your morning routine. Your morning trading routine, this is incredibly important to check this, because this will help you with a bias. This will help you set your targets, set your expectations for the day. So if you look at Fridays, gaps between $3 and $5, 75% of them don't get filled. So this is how you can use the gap fill report. This is just a table of the results. So this is the graphical version, obviously, and that's how you can use the gap fill report to make money trading.